Hi there and welcome to Economic Observations. My name is Chris. Today is February 9th, 2022. This video is brought to you by the Tanzania School Foundation, a nonprofit near and dear to my heart. If you would like to support this channel, please consider making a donation to TSF. And if you can't do that, please hit the like button or subscribe to this channel. All right, let's get started. We are going to talk about inflation and what is driving it. Is it wages spiraling out of control as the Fed indicates? Is that what's really driving inflation? I don't think so. I think it's corporate greed, and we'll talk about it. The Fed is talking about raising interest rates in March during their next session. I think this can have a detrimental effect on jobs in America. You see, the problem isn't rising wages. The wages haven't even kept up with inflation. And yet, some companies are exceeding expectations in their profits, and they're buying back their stock like never before. This is an excuse because they can. Because some of the biggest companies in America have no competition. During inflation, you would think that companies would lower their prices in fears that a competitor will outbid them. Right? So if you see something that's cheaper, that people will buy the cheaper item rather than the more expensive item. And this isn't happening because of marketing power. Now, what happens when the Fed raises interest rates? When the Fed raises interest rates, millions of Americans will lose their jobs. So the fear is that the labor shortage is pushing up wages, which in turn are pushing up prices, and that the wage price spiral effect can get out of control. I don't believe that. It's a big mistake. Higher interest rates will harm millions of workers who will be involuntarily drafted into the inflation fight by losing jobs. The problem isn't rising wages. The problem is there's not enough good jobs that Americans can support their families. The biggest culprit of rising prices is not being talked about, is the increasing economic concentration of the American economy in the hands of a few giant corporations with the power to raise prices. That's what it is. If markets were competitive, companies would seek to keep their prices down during an inflationary period in order to retain loyalty and demand. When prices of their supplies rose, they cut their profits before they raised prices to their customers for fear that another competitor would grab their customers away. But strange enough, it's not happening. In fact, even with the supply constraints, corporations are raking in record profits. So don't tell me it's price wage spirals, because I don't believe that one bit. More than 80% of the S&P 500 have reported results this season that topped analyst expectations. 80%. Obviously, supply constraints have not eroded profits. Corporations are just simply passing the price to customers. Many of these companies are raising their prices in excess to retain even more profits. Many of these corporations don't have to worry about their customers being lured away by competitors. They have so much market power that they can relax and continue to rake in the big bucks. The underlying structural problem isn't the government overstimulating the economy. It's that big corporations are under-competitive. Corporations are using the excuse of inflation to raise prices, but in return, they are making fatter profits. Don't let this fool you. Look at these earnings reports that come out, and the stock market was up again today, and people are fueling in to this game, into the bubble. The result of this transfer of wealth from customers to corporate executives and major investors. It's not even the little investor. It's the big investors. That's what's taking the profits. And they are doing it on the backs of us. I say a boycott is necessary. It has nothing to do with inflation. Everything to do with market power in the hands of a few. This, my friends, is called an oligopoly, where 2 or 3 companies roughly coordinate their prices and their output. This happens when 2 or 3 companies get together and they set the price and the supply. 2 firms. You know, last year in June, Kroger's CEO said, inflation is good for our business. The CEO of Colgate-Palmolive said, we are good at pricing. Okay, what is that telling you? What is that telling you? They're good at making profits on the backs of poor Americans that need toilet paper and diapers and everything else to survive? Well, I'm not saying you need toilet paper to survive, but everything else. 2 firms that are giants in household staples are Procter & Gamble and Kimberly-Clark. In April, Procter & Gamble announced it would start charging more across the board for all of their products, from diapers to toilet paper, citing rising costs for raw materials is what's raising the prices. Resin, pulp, and higher expenses to transport goods. Baloney. P&G is raking in huge profits. In the quarter ending in September 2021, after some of their price increase went into effect, it reported a whopping 24.7% profit margin. Almost 25% profit margin. And it spent $3 billion in stock buybacks. Now you tell me, who is causing inflation? It's because P&G faces little competition. The lion's share of the market for diapers is controlled by 2 companies, P&G and Kimberly-Clark. It wasn't coincidental that Kimberly-Clark announced similar price increases at the same time as P&G. Both companies are doing wonderfully well, but American consumers are paying more. Okay, let's take Pepsi and Coca-Cola. Pepsi does Tropicana and Gatorade and Quaker, and they own a plethora of companies. And Coca-Cola, they announced that they were raising prices. Higher cost for some ingredients, plus freight and labor. Rubbish. The company reported $3 billion in operating profits and increased its projections for the rest of the year. It expects to send $5.8 billion in dividends to shareholders. If Pepsi faced tough competition, they could have never have gotten away with it. But it doesn't. It appears to have colluded with Coca-Cola, which oddly announced price increases around the same time Pepsi did. It has increased its profit margins by 28.9%. And it goes on and on and on. You getting where I'm coming from? It's not wages that are causing inflation. It is the lack of competition in some of these gigantic companies. And the only ones benefiting are the executives and shareholders. And who is getting screwed? The people. So when they raise interest rates in March, they're going to lay off people because people don't matter. All it matters to these big corporations is the profits that they earn. But I think that there's going to be some consequences with rising interest rate. Money's not going to be so cheap anymore. People are going to take it out of the stock market, and I think it's going to hurt all of these companies. Look at Peloton. The CEO was on the news yesterday saying, well, you have all this product that you can't get rid of right now. Will you lower the price of your bicycles? And they said, oh, no, absolutely not. We may raise them. The only way we can get out of this is if we boycott them. I'm serious. Boycott the companies. Don't use Amazon. Don't pay for Prime. Amazon had record profits, and yet they raised Prime by $20 because they can. Netflix raised their prices. Why? because they can. Supermarkets are raising their prices because they can. You can see a similar pattern with energy. Oh, well, go figure. Once it became clear that demand was growing, energy producers have quickly ramped up production to create more supply. But they didn't. Why not? Why not? Industry experts say oil and gas companies and their CEOs and major investors saw bigger money letting the prices run higher before producing more supply. They can get away with this because big oil and gas companies don't face much competition. They are powerful oligopolies. Since the 1980s, 2/3 of American industries have become more concentrated. Monsanto now sets the prices for most seed corn. Airline mergers bringing the total number of American carriers down from 12 in 1980 to 4. So what's the appropriate response? The Federal Reserve has signaled it won't raise interest rates for the time being, and that inflation is driven by supply bottleneck. Price inflation is a symptom. It's a symptom of consolidation, where companies are too big and hold too big of a market where they control the prices, not wages, as the Fed indicates. I hope, as always, I hope you learned something today. If wages were causing inflation, it would keep up with the prices. But it's the corporations who are setting the prices, superseding the wage increases. It's also a lack of good jobs. I was reading a whole bunch of articles and watching some YouTube videos on housing problems. And I tell you, in Pensacola, Florida, where people were able to rent a 2-bedroom house for $800 a month, well, those days are gone. People who are on Social Security with a minor check, who rented houses for years, are being kicked out of their houses where landlords are raising the rent to $2,000. Is that the same scale? Are landlords getting together and setting the price of these exorbitant prices? Why? Because they can. In Pensacola, the county in which Pensacola is, and there's over 1,500 children in the public school system that are deemed homeless, either in a homeless shelter, living in a car, or a tent. Middle-income Americans can't afford to live anymore. They were talking to a couple. She worked at a supermarket making $11 an hour, and her husband was a truck driver, and they had 2 children. And they just moved into a homeless shelter because they couldn't find a place that they can afford. People moved down there, 5, 6, 10 years ago to reduce the cost of living at retirement. They moved from Minnesota, New York, Massachusetts, Maine, California, Texas, Arizona, you name it, they moved to Florida. Better weather, cheaper cost. Well, now they are outpriced. Their Social Security checks can't cover a place for them to live. What have we become? And we let it happen because we continually go and buy things. We pay that Prime membership. We pay for Netflix. We pay for the Peloton subscription. We pay for a plethora of things. And whose fault is it? We need to boycott them. We really do. Why should Coca-Cola, Pepsi, Kimberly-Clark, Merck, Pfizer, and all the other companies I mentioned have record profits on our backs? The only people that can stop this is us. As always, thank you so much for watching. I appreciate you. Call someone, tell them you love them. Hit the like button, subscribe, comment below, and I look forward to hearing from you. Have a great night, folks.